Unlocking the secrets to amazing dividend stocks and ETFs in 2025. Are you concerned that your job doesn't provide enough income to cover your monthly bills and expenses, support your family, and maintain your lifestyle? Perhaps you want additional income to help save towards retirement or to fund a project. Did you know that millions of people generate steady passive income from dividends? Investing in the stocks of high-quality, dividend-paying companies is an excellent way to generate consistent passive income at any stage of life. Many great companies regularly distribute a portion of their profits to shareholders as dividends and have maintained a long track record of doing so. The question is, how or where do you find them? In this video, we will examine some of the top dividend stocks and exchange-traded funds, or ETFs. If you are unable to analyze individual companies, one of the best places to find companies like these would be the two lists of companies referred to as Dividend Kings and Dividend Aristocrats. Dividend Kings are companies with 50 or more consecutive years of dividend increases. Similarly, Dividend Aristocrats are companies that have maintained at least 25 consecutive years of increasing dividends, are members of the S&P 500 index, and meet specific minimum size and liquidity requirements. As of March 2025, 55 companies qualify as Dividend Kings, and 69 companies qualify as Dividend Aristocrats. To view the most recent lists of Dividend Kings and Dividend Aristocrats, along with analysis on the individual companies, including dividend yields, payout ratios, dividend safety, and the number of years of dividend payments, check out the links in the description section of this video. Investing in dividend stocks allows you to generate income immediately with minimal effort. With as little as $50, you can start putting your money to work. Dividend investing isn't just for the rich. Some dividend stocks even pay dividends to shareholders every month rather than quarterly. Additionally, if your investments are in a tax-advantaged account, such as a tax-free savings account or a tax-deferred retirement savings account, depending on where you live, you can receive all your dividends either tax-free or tax-deferred. This allows you to keep even more of your dividend income. Another strategy for investors seeking both income and diversification is to invest in dividend ETFs. ETFs are traded on major exchanges, offering liquidity and transparency for investors. Dividend ETFs hold a portfolio of dividend-paying stocks or securities, which reduces the risk associated with individual stock performance, making them an attractive option for generating regular income. Best of all, they provide a balance of diversification, steady income, and potential capital gains. There are various types of dividend ETFs. Some focus on high dividend yields, others emphasize dividend growth, and some combine dividends with options strategies to enhance income. Here are 5 well-established and diverse dividend ETFs. 1. JP Morgan Equity Premium Income ETF with ticker JEPI. This ETF focuses on generating income through a combination of equity investments and option strategies. It has a yield of about 7.5% paid monthly and has a relatively low expense ratio of 0.35%. 2. Spider Portfolio S&P 500 High Dividend ETF, ticker SPY-D. This ETF provides exposure to 80 high-yielding dividend stocks within the S&P 500, has a yield of about 4.4%, and a low expense ratio of 0.07%. 3. Vanguard International High Dividend Yield ETF with ticker VWAMI. The ETF invests in developed and emerging market stocks, excluding the U.S., has a yield of approximately 4.4%, and a low expense ratio of 0.17%. 4. iShares Preferred and Income Securities ETF, ticker PFF. PFF invests in preferred stocks, yields about 6.4% paid monthly, with an expense ratio of 0.46% and is relatively stable. 5. Schwab U.S. Dividend Equity ETF, ticker SCHD. This ETF tracks 100 high-quality dividend-paying U.S. companies, yields approximately 3.8%, and has a low expense ratio of 0.06%. There are also dividend stocks and ETFs that offer yields exceeding 10%. We will examine some of these in another video. However, note that while a very high yield may provide greater income, it also involves a higher risk to your capital or portfolio. Always conduct your due diligence before making investment decisions, and consider consulting a financial advisor, as the information provided is for educational purposes only. Investing in dividend-paying stocks and ETFs can be a great way to generate passive income at any time, while also benefiting from potential capital appreciation. Some investors may want to adopt a dividend investing strategy with a long-term approach, allowing for compounding and wealth accumulation. Regardless of which option works best for you, the key is not to delay, so start investing today. To discover a smart and simple strategy to find and buy excellent stocks today, check out our Smart Investing for Beginners course using the link in the description section of this video or at courses.joskedconsulting.com.